Take a look at the latest technical signals in the market. Joining us now is Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. What's your number on the S&P gains since Liberation Day? It's like 30%, isn't it, from the lows, Katie?
Yeah, it's pretty impressive. And now we're up about 11% on the year all in. We still have the support of the rising 20-day moving average, which has been our way to eliminate all the noise. These 3-day pullbacks, they just tend to refresh the uptrends. We want to respect that.
It seems like, where does that, so we're up, obviously, now from levels that we were at the beginning of the year, but it still seems like there's some overhead resistance. It hasn't been near the first, I don't know, it's probably not a shock. The first 30% were easy. Now it seems like we're struggling more. Is it going to get any easier, or should we expect backing and filling for 6 months?
Yeah, I think it's already gotten harder for investors with the mega caps having lost their leadership stronghold, is the way I would put it. So we have seen a shift in relative performance on the sector level, especially hitting tech to, not a huge degree, but enough to suggest that we have a little bit of a different tape unfolding here. As of, I'd say, the beginning of August, we saw some consolidation unfold, pullbacks in some of the heavyweights like NVIDIA and Microsoft. The market's weathered that really remarkably well, so we want to respect the breadth that is there right now. But we also want to be mindful of seasonal influences, and if we do see a downturn in the 20-day moving average, we want to hedge through that. The VIX has already sort of perked up from its lows, peaking above its 50-day moving average. And that tells us that volatility may be in store this month into next month, and that's very normal for the market. And I think investors would be welcoming of that because we just haven't seen those substantial pullbacks to make us feel like we're getting a decent entry point.
So what do you think gold is trying to tell us? And can we figure out anything about the bond market or the stock market from gold?
Well, gold, the big breakout is really impressive and saw immediate upside follow through. That was through a sort of a range resistance level. And it's a great diversifier in a portfolio. So not only is it posting strong gains, but it provides a lack of correlation perhaps at times from the S&P 500, which you could argue that a lot of people are probably carrying some concentration risk in their portfolios these days. So we like gold, we like the breakout. The breakout does allow for an upside objective, about 4% above current levels. It was more impressive a few weeks ago, but we'll take it, and we want to just sort of ride that uptrend. For yields, it's been pretty interesting of late. We did see a breakdown below that 4.2 support that we talked about last time, and now testing 4% area, which is essentially the lower boundary of this long-term triangle formation. You can see it if you draw it back to the early 23 low. And if that level's taken out, well, then a cyclical downtrend in yield has taken hold officially in our work. And you could get a downside objective of about 3.2%. So
wow.
It would be a pretty big deal if we see a breakdown below that 4% area in our work, just strictly from a technical perspective.
Does the bond market just march to its own tune? The vigilantes are sleeping. They're going to sleep forever. We saw a little steepening, but it's still staggering, the amount of debt that we keep layering on. And how are we going to 3.2? How are we? Dollar's still strong enough to where all capital still flows to the U.S. into these things?
Well, the dollar has seen some firmness of late, but there is a cyclical downtrend there as well.
Right.
If you go way, way back, there's a secular uptrend.
Right.
And you're referencing the dollar index. That uptrend lies right around 96.7. So I think that's a key level for the dollar. If we see that taken out, then we can expect a greater weakening trend or that cyclical downtrend to extend itself. So that's what we're watching in terms of support. But again, we do think that there is, sort of a reasonable need for fixed income in portfolios right now. Not a huge position in it, but we do see some relative strength shifting for treasuries relative to equities. And that would be also the case in certain commodities. So we're all about diversification.
I guess, your eyes glaze over when I try and get you to talk about fundamentals. Why is gold, breaking out with obviously, I don't know, the printing presses are going to start printing again. Why is that happening as yields fall?
You know, it is remarkable, and I can't answer the why question from the charts, of course. We've seen the gold mining stocks, they're the best performer year to date within the S&P 500. It's just astounding. So for us, we just see it as momentum. Perhaps people are seeing gold more, sort of closely to a Bitcoin proxy. Bitcoin, as you know, has been quite strong. It's digesting its gains in a consolidation phase, but we saw a big breakout in Bitcoin within the context of its long-term uptrend. So we're just seeing this consolidation there as healthy. So maybe it's being treated more along those lines. We can't be sure, but we do want to be honoring the momentum that's behind it.
Well, September and October are not playing out like we thought. I guess there's still time. But what is Bitcoin most correlated with? You said gold might be correlated with Bitcoin. That's kind of funny. It's been around for 4,000 years. Seems like it would be the other way around. But what is Bitcoin correlated to? The NASDAQ or
it depends on when you look at it, right? So over time, it's been more historically correlated to the NASDAQ 100 than anything else that we've referenced. And yet that correlation does break up. We're not ones to typically rely on these historical correlations, but rather adhere to the momentum gauges and adhere to them over different time frames. So for Bitcoin, long-term upside momentum is still there, but the short-term momentum is more neutral. So we just respect that. And for those that are looking for an entry into Bitcoin, we would just say wait for more support discovery. The support's between about 108 and 111,000, so it's not too far below current levels. And the last breakout that we saw there arrived at a measured move objective of about 135,000. So that would be pretty impressive upside from here.
Tom Lee was with us yesterday, and he said Bitcoin could double by the end of the year. Katie?
200,000 was his number.
Okay. So, yeah, that's a pretty aggressive upside objective. I don't know if I can get there in my work. With the breakout, the best we can get to is 135. And the relevance would be probably more for early 2026. These are not precise objectives, of course. These are just sort of assuming the trajectory of the uptrend. So the uptrend would have to steepen, as you know, a whole lot to get us to 200. But the fact of the matter is that, the long-term uptrend is behind Bitcoin. And we have great action in some of the altcoins. If you look even at Dogecoin, we saw a triangle breakout yesterday. So we do have some action there from a technical perspective. Ether broke out above 4,000. That was a big breakout for it. So the whole complex is interesting, we feel, from a technical perspective. And it's just a matter of timing those entries.